Hey, Renter Retires, it's Adam Schroeder here with another episode. Not joined as usual by Zach Lee Master, the founder and CEO, but we are joined by our build team out in Alabama, Mike and Robert. Thanks for joining me today.
Yeah, thanks for having us. We're glad to be here.
Yeah, same.
Yeah, so we've been working with y'all for, I don't even know how many years at this point. This is one of our great teams. They're new construction in Alabama. If you see it come up, it's almost definitely with these guys. They have one of the strongest property management teams we've seen around. Just a great overall experience. So we've seen some new markets pop up with them that we want to touch on, because I know in the past we've talked about the areas they've been in, and people read them and they're like, I've never heard of these places. Where are they? What's going on? Are they growing? Are they just there? So we're going to dive all into that. So let's start with just the very broad area that we're talking about. And these are primarily the surrounding Birmingham areas, correct?
Yes, and then we've incorporated now the Montgomery market into what we're selling. And so we'll talk a little bit about the Montgomery market surrounding it and the Birmingham market all the way to Tuscaloosa.
Yeah, so let's dive into that a little bit. Remind people kind of why Birmingham has been growing, because I know especially, and I always remind people when I'm talking to them on the phone, if you look at the Birmingham core, don't look at the Birmingham core.
No.
But if you look at the Birmingham suburbs, look at the Birmingham suburbs, because that's where people are actually moving. That's where people are actually getting, doing all the good things that's going on. So remind people why on earth Birmingham is good, and then introduce them to Montgomery a little bit. I mean, I think pretty much anything anybody knows about Montgomery, if you don't live in Alabama, is, capital.
Right. Right. Yeah. So if you're looking at the Birmingham MSA, definitely take out Birmingham City of, and look in the surrounding 7-county MSA, and it's the growth is in the financial sector, the health sector, the auto sector. It's just it's a steady growth market, which is, when I'm looking to invest, that's what I look at. Is I don't want the big roller coaster. I don't want the big ups and downs. I just want steady growth up. And that's kind of been has been the track record for Birmingham for years. And if you're looking at going as far to the east of the state, over into the Talladega County market and St. Clair County, you're pulling in from like Honda, the Anniston Army Depot. You've got a lot of growth in that whole area around Anniston and Oxford that a lot of people live between. One might work in Anniston, one might work in Birmingham, and they live between in Talladega County or in St. Clair County. And then you go as far west as Tuscaloosa County, and you've got Mercedes, and you've got all the ancillaries around Mercedes. And the one thing about the Birmingham MSA is I think there are 6 auto manufacturers within 2 hours of Birmingham. And in order to be a supplier for the auto manufacturers, you got to be within 2 hours. And so what happens is a lot of the suppliers for all of these auto manufacturers locate in the Birmingham MSA, because there's a bigger job market or a bigger pool of employees to pull from. Plus, they can ship to all 6 of the factories that build the automobiles.
Yeah. And so we were saying is the tech coming down? I mean, when people think of tech in Alabama, it's mostly Huntsville. Is it coming down into Birmingham and kind of spreading, or is it different than that? Because but the PhD capital of the United States, right? That's Huntsville. So is it coming down?
Yeah, what you're seeing more in Birmingham is biotech, which is, it's not your normal government contract type stuff. It's more the biotech, because Birmingham's such a health and medical center. UAB is the largest employer here, with the hospital and the school and all the things that encapsulate that. That also goes to the stability of the market, because medical is always going to be there. And so that helps as far as stability and not having the ups and downs like a roller coaster in the real estate values.
90% of real estate investors miss key tax savings by overlooking deductions. Flipping houses, managing rentals, or growing your real estate empire? Make sure you've got experts in your corner, especially when it comes to taxes. That's why we turn to Nevada Corporate Headquarters, the experts who help us reduce taxes and set up our real estate LLCs. With 35 plus years of experience and 17,000 five-star reviews, Nevada Corporate Headquarters helps you manage properties across states, navigate tax laws, and protect your assets, all with a real estate LLC. Visit ncinc.com/RTR to schedule a free real estate LLC formation and tax consultation. Plus, receive a free guide to safeguarding your assets. Yeah. So let's move further south and get into the Montgomery area, because that's, we talk about Huntsville, we talk about Birmingham, we get a little bit lower, and I think you get into like the Clanton and the Thorsbys, and then you hit Montgomery. So other than the government, which, as everybody knows, right now the government size may be up, maybe down, depends on which sector you're in. But what else is going on in Montgomery that people should know about that's driving growth?
Well, again, you have automobile manufacturing. You've got the massive Hyundai plant there that employs, I forget how many, I'd have to check that, but thousands of people work there. And again, you have suppliers around it. Montgomery itself, if you're in the east side of Montgomery, is a great investment. Back when the dinosaurs roamed the earth, I went to law school there, and so I lived there. And it's got a high growth to the east side, and then if you look at the Montgomery market of where we're selling, that encapsulates Auburn also. Auburn has about 31,000 students, and I know it well because I went there and have family there, and it's a great investment as far as your rent return for your investment. And then when you go south of Montgomery to Troy University has about 16,000 students now. And we don't focus on student housing. We focus more on the people working at the university and supporting the university, that kind of thing. I've done a little bit of student housing in the past. It's not my preference. I like a nice 3-2 single family with a double garage that a family lives in. It's more stable. You're not dealing with, 3 students and 6 parents on a lease. And so it's just a little bit easier rental. But there's tons of demand in that Troy market. You've got Prattville and Wetumpka and Millbrook that are a little bit north of Montgomery. And a lot of people, because of the school systems, live north and commute into Montgomery to work from those. And so there's lots of, obviously you got government, the state government, you've got the automobile industry, you have tons of attorneys, and again, the financial sector, and then there's a large hospital there in the middle of Montgomery too. So lots of very stable type, jobs, and a very, the other thing that people don't know about Alabama is we actually have a balanced budget. The state does. We don't overspend, which we affectionately call our governor Meemaw, because she's about 80. And she is a fiscal conservative to her core, and that's been a real plus for the state, because she's real big on offering incentives to businesses, and she's very pro growth on the business side. And then the lieutenant governor most likely will end up following her after her term ends, and he's very fiscally conservative too. So we're encouraged about the state growth.
Yeah, let's talk about that growth a little bit. I think when we had y'all on, I don't know if it was a year or two ago, and you were talking about just the growth of the markets that y'all are in, because you go in and help continue growing these communities, and sell some to retail, some to investors, so that you've got a nice mix in there. I think you said y'all had like average an 8 or 9% appreciation year over year. You talked about rent growth being somewhere in like the 4 to 6%. Is that still happening? Because we've seen a lot of markets out there kind of flatline. There's the big markets like in the coast, you've seen obviously go down some. How's the overall growth in the area, both appreciation and rent wise, been going over the last 1 to 2 years?
So over the last 12 months, in the markets, I think we're in about 15 markets right now within the state, within those two MSAs. And last year, the average across the board was 6.84% in the last 12 months on appreciation growth. And our rent growth across all those markets was 4.5%, which, considering the economy, considering what's going on in other areas, we're encouraged because it's got a steady growth rate. And it's very in line. The average is about 6% over about a 60-year period on appreciation, and it's just above that, about 6.84% for the last 12 months on appreciation.
Not bad.
Not bad.
Plus, we have the affordability side as well. So our average price point is about $300. We range from $200 to around $350. So, we're still in that entry level price point.
Hey, renter-retires. What did you learn about rich people growing up? That they were just lucky or something? Believe it or not, that's actually the kind of thinking that could block you from building real wealth. Crazy, right? So how about you stop sabotaging yourself with that way of thinking? Tanisha Souza broke it all down for you. She's the one behind the Income Snowball, a very cool way to create passive income faster than you thought possible, like work optional fast. And guess what? She just published a book about it. You can check it out at creatingyourincomesnowball.com. Want to learn even more and claim your free strategy session to learn how you can do the same? Visit rentretirement.com/TARDUS Wealth today. Trust me, this is one snowball you don't want to miss. Tell us about these, as people go to Rent to Retirement and click on the inventory and they get to the sheet that we have and they're seeing all the places. You mentioned kind of, Birmingham, moving east, moving west, Montgomery, north side, all of this. If someone doesn't want to go online and look up where on earth these places are, tell us a little bit about kind of each of these, a couple of these markets and kind of where they are located wise and kind of anything that we need to know about them.
Okay. Robert, you want to take that and just work from the top down?
Yeah. So you probably are somewhat familiar with Coleman since we've been there for a little bit. Coleman's always been a great market for us. It's in the middle of Birmingham and Huntsville, so you kind of get to pull from both cities, dual working couples, things like that. Calera. So I'm kind of just going to loop these into our central region. So Calera, south of the city. You got Odenville, Bessemer, Columbiana, Tuscaloosa. All that is, so Odenville's east, Tuscaloosa's west. Columbiana is east. South, sorry. South near Calera. So kind of, what's that?
Even y'all. They're all in.
Yeah, so sometimes, something we're kind of, Columbiana is a newer market for us. It's a strong market. So we're kind of excited to be in there. We're in that, it's a little bit lower price point, 262. So,
and it's the county seat of Shelby County, which is one of the wealthiest counties in the country.
Correct. And, all these places that we're going to be in are going to be in strong counties. Really, we stay out of Jefferson County. We have a few that are in there, which is the center of the city. But, Shelby County is our strongest county in the state, one of our fastest growing as well. And then, we're in the Montgomery, which Mike kind of hit on that. It's, at the capital. And then Dothan, Mike didn't really touch on much. It is south of Montgomery, southeast. It's actually had the highest appreciation the past year. We're right around 9%. That's a market that we're excited to touch at because you have Enterprise that's right next to it. But Dothan it's very sneaky. It's kind of the peanut capital of the South.
Well, actually, peanuts and condoms. Yeah, they're.
But you have a major base, Army base there, and then the price points, more on the affordable side with strong rent growth. So that's the kind of a market we've been eyeing ourselves to be in, and we're glad we're finally there.
Okay, those are two things that are never going to go out of style. There's always a demand for those two things, so yeah, we're good to go.
Yeah, and then the Auburn market Mike touched on is a more of a newer market for us. That was around the 8% year-over-year growth. That's another market we're excited, the Auburn, Opelika area. So, kind of overall, we're just excited about having these new markets to, offer you guys.
Yeah, I'll tell you a little bit. Like Auburn, I'm very familiar with Abadar. That's a junior there. And, I tried to buy a house for her, for her and her roommates about her freshman year, and she's like, "No, I want to live in this apartment complex," and I'm like, "Fine, whatever." And I am paying for it's a 4-bedroom, 4-bath unit, and we pay for a bedroom and a bath, and her rent is $1,380 a month. So it tells you, and that's right in the core of Auburn. But when you get out, even it's crazy how the rents and the pricing. It's got a very good return in Auburn, and then same thing if you're looking at southeast of Montgomery at the Troy market, you've got Troy, Dothan, Headland, and that whole area, Enterprise around there. And I think it's the growth is being driven not only by the employment sector, but because of those universities on top of that. And so they've got kind of a plus in that as far as the sales, as far as the appreciation and the rent growth. It's up on student housing.
Yeah. So let's dive into just the asset y'all are building in the first place. I mean, are these areas where you've got a mix of older built home and new construction, or are we talking just, new construction going on around there? And then just talk a little bit about the benefits of new construction in general. I mean, we love it. We're pitching it to our investors because build to rent is, in our opinion, the way to go. But, there's obviously existing homes that are out there that some people, want to be in or can't afford to be in the new construction. So talk a little bit about kind of the areas, like the immediate areas that these are in, and then a little bit about kind of why y'all are in the new construction business rather than the flipping business.
Yeah, so I'll talk a little bit about the areas, and Robert can hit on the other side of that. And we're in new communities, selling all new homes, and the reason we do that, there's various reasons, and Robert will hit on that. But what we like about this is we're not going in and doing whole communities. They're segmented between regular primary buyers and investors. And in the new markets we're in, there's only so many that are designated for investors and spread out through the community so that it's not oversaturated for rental purposes, but also keeps primary buyers in the neighborhood happy too. And so it's a fine balance in what we do, because you get too many rentals in the neighborhood, then the primary buyers get all upset. You're dealing with HOA issues and all this. And so we found a good balance in how we do that. Having done it for 22 years now, we know kind of how to avoid the landmines in that and how to try and keep everybody copacetic. So
what's the rough percentage of owner occupied?
In the new communities that we're going into right now, I would say it's less than 10%.
Yeah, I'd say at least 85% is owner occupants.
Yeah, at least. More than probably 90.
90, yeah.
And so that's why you'll see that we have limited numbers in each community. It's because it's being spread out, and we're doing offerings in tons of communities. And we have more that are coming later this year, but more communities, and they'll spread it out even more. Which I think and it's kind of like when I'm buying properties myself or building properties for myself, I like to spread my risk out in several markets. And that way, if one's getting 5%, one's getting 9%, I'm averaging 7% on appreciation. And so I try and spread that out among all the different markets we're in. You want to talk about that?
Yeah, but there's benefits of new construction. Simple maintenance, biggest issue, when it comes to owning houses, especially when you're an out-of-state investor and you're relying solely on your property manager, and we have the numbers where we've ran on average first 5 years around $300 on maintenance a year. And, the houses come with a warranty. They come with a structural warranty as well, a 10-year structural warranty. So anything to mitigate the maintenance side of things, really helps. Plus, these new construction homes that we're, offering are in desirable areas. So we are able to limit vacancy as much as possible, especially when the majority of the community is owner occupants. People gravitate towards, a nice looking community. Renters gravitate towards, the schools and things like that. So it just puts it at a premium, compared to, these one-off, older houses that are trying to get the exact same amount of rent. We see, the sign on the new construction just is much more attractive for a renter and a family. So maintenance, biggest thing. The house sizes, they're averaging around 1,700 square feet. We have a mix of 4 bedrooms, 3 bedrooms, few fives, three baths, 2.5 baths, 2 baths. There is a floor plan, that's a little bit smaller. It's a 2-1. We're starting to see a little bit on that side of it because you can get, the price is around 190 and, get a little bit lower rent, but it's still strong on the return side. So you're attracting, a little bit someone that's a single person that's wanting to not pay 1,600, 1,700, numbers work at 1,400. And so we've kind of started seeing.
It's actually good for an investor maybe that doesn't have like a huge down payment and then get in with 20% down on something like that, and it's got a good return on it. So the cost of entry is less for the investor, but the appreciation's the same.
Right.
And so rent growth's the same. So
yes, but that's kind of the main reasons why we gravitate towards new construction. Trying to limit maintenance as much as possible. Get a little bit higher on the appreciation side because it is a new home. People just gravitate towards that, and then vacancy. That's another one that we're really trying to. There might be, depending on how many there are available, we might have some on the front end. Might be a little bit longer on the vacancy side, but once it's stabilized, it's always a constant flow of strong because we on 2,000-ish units that we manage, we're roughly at 96% occupancy, 96.5. So, that's strong throughout the country.
It's a new year, folks, so it's time to refresh your rental strategy. Kick off 2025 landlording like a pro with AVAIL. Start the year strong by finding great renters fast without the hassle. That's right. Create your listing just once at avail.co and then watch as it gets syndicated to 20 top rental websites. You can also receive and review applications online, streamlining the entire process. Ready to screen prospective tenants? Easy peasy. You can access TransUnion credit reports, tenant background checks, and eviction history, all at your fingertips. Need a lease? AVAIL has lawyer-reviewed templates specific to your state that you can get signed online. And let's not forget about collecting rent. Accept payments online using your tenant's preferred method, making it easier for everyone to stay on track with rent. Ready to make 2025 your best rental year yet? Visit avail.co/rent to retirement. That's avail.co/rent to retirement and unlock the full potential of your rental properties. So let's dive in. I know we've talked about a lot of areas, and I'm going to put y'all a little bit on the hot seat here. If you could buy one home for appreciation and one home for rent growth, what communities or market are you looking in?
Good question. We love all of our communities. That's the standard answer, right? But I know people like to kind of hone in. But it's really kind of comes down to price point. I think is another thing to look at. The little bit higher on the price side, you're probably getting a little bit more appreciation. Typically because you're probably getting a little bit more high net worth individual and people moving there, they're going to be willing to pay higher dollars. But if you were to look at on the appreciation side, Birmingham has always been fantastic for us. Anywhere south as well, like Calera has always been a strong market for us.
Robert, run for a political office here.
I haven't heard the name of a community. Hornet, how about that? Yeah. So if I were looking right now, I would say I was going to buy, I'm going to say 3 houses. And I'm looking at, I would gobble up the 2 bedrooms in Tuscaloosa because there's not that many of them. And the price point's low. The rents are great. And those 2 bedrooms are something that there's not much of. So it's more of an anomaly. It's like one of those things that there's demand for, but not enough of those are being built. And so you'll see us shift a little more towards some 2 bedrooms as the year goes on, because we found from market research that there's a big demand for it. As far as what Robert was saying on the bigger houses, I would look at in the markets like Dothan and the markets like Prattville, Montgomery, St. Clair County, like Odenville area, I would focus in on that 4 and 5 bedroom market because you have some larger families that rent in those areas. And so I think I would mix it up if it were me, because your appreciation is bouncing between the low 6s to 9%, and I'd blend it and buy 3 that blended somewhere around 7.5. Your rent growth is going to be similar, and your appreciation is going to average in that 7.5 range if you do that.
All right, Robert, you come up with any community name yet, or are you still sticking with your political answer?
Yeah, I like to go. I'm kind of like to go where the lowest inventory is. That way, you're not competing with a lot of people. And so we don't see much in that Columbiana area.
Mm-hmm.
There's just not very much new construction. The topography is kind of funky, so there's just not able to build as much houses, just because the land is it's tricky. So it just costs a lot. So if you can get into a house at a good price, I think that's a fantastic place to be in. Mike, Odenville, that's another one that that's always been strong. Taxes in St. Clair County are very low comparative to what the schools are, and so kind of theirs. And then Tuscaloosa has always been fantastic for us. Not many people are there. We have a lot of data from renting in Tuscaloosa, so that's kind of the highlight points where I'd probably start my investment at.
You got the 2 bedrooms in Sandy Ridge, but then you can go to Northport, which is in Tuscaloosa too, in Tuscaloosa County. And Northport is, a lot of people live across the river in Northport, and it's a little more upper end area. Price point's a little bit higher there, but it's not substantially higher, and your rent's pretty strong in that, where you could mix up in Tuscaloosa County and about 3 different markets within Tuscaloosa County and have a great portfolio.
Yes, and I will say the Sandy Pines in Tuscaloosa, it's not in the city, so you're not paying city taxes, and you're getting the same rent growth. So
and same schools.
So that's something to always keep an eye on, to look at, because it's great to be in the city, but you have to pay for it. So if you can be right outside and pay less taxes, get better cash flow, I think that's a win.
Yeah.
Absolutely. Well, before we wrap it up here today, is there anything else we need to know about anything y'all have going on? I mean, I know people need to look at the website and see y'all have a bunch of incentives going on. That's like rate buy downs, free management, rent credits. I think y'all are even throwing in money for a refrigerator at the moment. I mean, there's a lot going on that side. But is there anything else you want to touch on before we wrap up here?
Well, I'll hit on one project we've got coming in Clanton, and Clanton's been a good market for us for quite a few years now. And we have 3-bedroom, 2.5 bath, 28 townhomes we're about to release in 2 weeks. It'll come in right under $200,000. Rent's going to be somewhere in that $1,395 to $1,450 range. So those will be great. And they're fee simple townhomes, so you're not dealing with condo fees. You actually own the land under your townhouse, which is a good thing. It's individual lots. And so we think those are going to be a really strong investment. And so we're going to actually release those as soon as we start construction. It's about a 5-month build time. So that'll be something to be looking for coming in the next couple of weeks.
Okay. Fantastic. And I'm assuming the HOA on those is going to be investor friendly and not some $50,000 a year to.
No, we control that. So yes.
Absolutely. Well, again, everybody else, head over to rentretirement.com. You can see all of the inventory that they have going on. There's a lot of it. There's a lot of different options. As you heard here, just go online, look up the communities or look up the areas, see where it is, listen to their advice, but then also dive in, do your own research on it. But you can find that at rentretirement.com. Schedule a time to talk with us to see if it's a fit for you. We have a lot of different financing options. We have a lot of different incentives going on with it. So make sure you talk with our reps to see exactly how you can best purchase one of these properties. And like they said, there's price points all over the place. So it's good for pretty much any entry. And if you have any questions that you want answered in future episodes, or if you want to tell your own story, you can email podcasts@rentretirement.com. That's podcasts@rentretirement.com. We will get back with you. And if you've got a good story, we'll put you on the show here with Zach and me. Robert, Mike, really appreciate you coming around and educating us today.
We appreciate it. Thanks, Adam.
Yeah, thanks for having us.
All right. So everybody else, again, rentretirement.com. We really appreciate the time you spend educating yourselves today. Talk to you on the next episode.
Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.